Hi, I am Anna. I come from www.ntvforex.com. USD rally hit the buffers as yields begin to slip back once more. Video analysis http ntvforex.com news ID D687E2813 11:44:14 AM market overview. As the negotiations between Democrats and Republicans over fiscal support seem to be dragging and is just beginning to weigh slightly on sentiment today. Treasury yields have dropped back marginally in the process, pulling a mild bull flattening move through the yield curve. Furthermore, there is a slight pullback on equities too. With the yield curve bull flattening, a dollar rally that has been threatening in recent sessions has just taken a step back once more. This is allowing the sharp sell-off on gold to ease somewhat. The questions will begin to be asked as to whether the past few sessions have been a blip, allowing the bigger trends of dollar weakness and gold strength to renew with trend potential. It is too early to determine, but the next few days could be telling. The longer that the U.S. fiscal support package takes to agree, the more nervous that markets will become that the package will underwhelm. Wall Street closed strongly higher once more, with the S&P 500 1.4% at 3,380 and a sneeze away from the all-time high of 3,393. However, U.S. futures are a shade back this morning, with the E-mini S&P 0.2%. This has though still enabled Asian markets a positive session overnight, with the Nikkei 1.8% and Shanghai Composite 0.1%. However, European markets are looking far more cautious, with the FTSE futures 0.9% and DAX futures 0.3%. In Forex, there is a USD slip, with underperformance across major pairs aside from NZD, which is still struggling in the wake of the RBNZ. In commodities, the selling pressure on gold has stabilized with the price 0.8%, whilst silver is 1.2%. Oil closed as multi-month highs yesterday but has just paired this move today, around 0.5% lower. It is a relatively quiet day on the economic calendar. The U.S. weekly jobless claims will be of primary interest at 1330 BST, with a further improvement to 1.12 m from last week's positive surprise of 1.19 m claims. NBSP chart of the day. ANZD USD. The Kiwi has looked rather vulnerable in the past week, and the reaction to the RBNZ meeting yesterday was a decisive downside break of the previous breakout support at 0.6585 0.6600. It is interesting to see that as the European session takes over today, the US dollar is ticking lower across every major pair apart from NZD USD. Having posted a lower high at 0.6690 under 0.6715, a new negative trend of lower highs and lower lows NBSP is now beginning to take hold. Even though the market rebounded into the close last night, this looks to have been a minor technical rally within what looks to be a deteriorating outlook, and another chance to sell. The daily momentum indicators are faltering on a consistent basis now, with RSI at near 3-month lows and under 50, whilst MACD lines are falling at multi-month lows and stochastics also taking negative configuration. The market now seems to be selling into near-term strength, with yesterday's high almost 0.6600 to the pip, and this morning's early high also failing at 0.6600. It means that Tuesday's failure at 0.6625 is a gauge of increasingly important resistance, making a mini sell zone now between 0.6585 0.6625. The market looks set to test the mid-July support at 0.6500, whilst if the selling momentum really takes hold, 0.6370 comes into play. NBSP Brent crude oil. We still see the bulls willing to support weakness in oil, but struggling to really push the recovery forward. Despite this though, there has been a closing price above $45.20, which finally closed to the bear gap at $45.20. Despite several intraday attempts to achieve this in the past week, the failure to close the gap has been a concern. But now the bulls can begin to cast their gaze higher and target resistance levels overhead. Brent closing this gap and closing at a multi-month high now means that there is very little resistance of note until into the $50s. The initial barrier of intraday highs of the past week, still needs to be overcome between $45.80 $46.25, but the next real resistance beyond this is not until $53.10 $53.80. We are still mindful of the tendency for false starts in the rally and look to use weakness as a chance to buy. The hourly chart shows $44.25 $44.40 as initial support. The low at $42.90 is of greater significance, whilst $41.30 is still key near term. NBSP Dow Jones Industrial Average after Tuesday's wobble, the bulls got back on track yesterday with a solid day of gains once more. With the breakout above the old June high of 27,580, the market has given the breakout a seal of approval, as it has used the break level as a basis of support. It now strengthens the importance of the band between 27,070 and 27,580 to be seen as a zone of underlying demand. Daily momentum remains strong, with the RSI consistently high 60s, stochastics above 80, whilst MACD accelerate higher. Futures may be consolidating today, but the bulls will be eyeing a push above 28,155 Tuesday's high, whilst also looking to close February's bear gap of 28,418,890. We look to use weakness as a chance to buy. The hourly chart shows support 27,580 27,625 initially. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.